The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, a quietly higher day on Thursday across the grains and oilseeds and across the livestock complex as well. Let's talk about things and take a look at what we see in these markets as we look to finish out the first week of December. Joining us now, Brian Doherty, Senior Market Advisor with Total Farm Marketing. Brian, good to catch up with you again. Hope you had a great Thanksgiving holiday, and here we are into the month of December, and still plenty of things swirling around this marketplace, but we'll take a mostly positive day on Thursday.
Yeah, I think yesterday was a bit concerning the way that the corn market really kind of had a weak close down about 6 or 7 cents, and you kind of looked at it and go, "Oof, what's behind that?" We really couldn't find much behind it. It was a day where the market was softer, just didn't have any gusto to it. Got a big pronounced head and shoulders formation on soybeans, so kind of concerned that too might follow through and see some selling. We didn't see that today. We saw corn up front month December. Now that goes off the board here soon on the 12th, but I think it's the 12th, but it's almost irrelevant. The market pays attention to March. March up 3 3/4, making back a good chunk of yesterday's losses that were in that 6 to 7 cent range. So very tight range bound market right now, a series of higher highs and higher lows on the charts. Nice pennant formation, inverted head and shoulders formation. So the technicals as a whole look pretty solid yet, Jesse. And yet, the market's really not trading anywhere in a hurry. We're at the same price we were a month ago, as we were 2 months ago. You can go back to June, you can go back to July. Same price on March corn. So long-term base building again, but really good export numbers, good export inspections, and daily announced numbers. All of those solid for corn and beans. South American weather starting to creep more into the picture now, and we need to start watching that a little more closely now that December is here.
Well, thinking about this corn demand picture, let's talk about that a little bit more. I mean, it just feels like the demand for corn remains really good as we chew through a big supply. I mean, we saw some flash sales on Thursday morning. The weekly numbers continue to look really good, really strong. I mean, talk about this demand picture overall for corn here and what we're looking at as we head into the end of the year, Brian.
Yeah, so you're looking at very consistent, strong end user buying, in particular the end user buying from overseas, and it's spread out. There's a lot of buying in a lot of spots. The catch up numbers we're seeing on the export sales, again, big numbers there. You're seeing for today's numbers are catch up numbers, but almost 1 million tons from Mexico. So you're seeing the buyers, I think, recognize value and recognize. I think there's two things. The bigger you produce crop in South America, obviously the more supply, but also the more risk to the end user if South America doesn't have good weather. So really the end user now has two weather markets you need to worry about. And so we saw that last year, if you might remember, where it looked pretty bleak in August, September, and then prices started to climb higher. And the next thing you know, corn eventually peaked out over $5 on the July contract, 5.10 to be exact, and that was in early February. That was a very significant recovery in corn prices, due primarily to, I think, the idea of uncertainty that just looked abound with South America, drought weather map in the U.S. So I'm not saying this is a repeat of last year, but certainly from an end user perspective, corn, even though it's higher price than it was in August, is a really, really good value. If farmers can't make money at it, somebody is buying it at bargain, and that means you can buy it for at cost or less.
You mentioned the good end user buying, and one has to wonder if we see a little more corn work its way out of the bin as we near Christmas and the end of the year. The old saying I've heard a few times here in the last few days is, the Bears get Thanksgiving, the Bulls get Christmas, and this is usually a good seasonal window in the grain markets in general for a little bit of a holiday rally and holiday movement, especially this corn market, Brian.
Right, and there's a few other dynamics to that. Now, just think about time of year. Farmers just kind of finished harvesting, right, and they sold their extra inventories, and now the bin doors are kind of closed. Going to most of the Midwest has got snow, very cold, early winter. Weight gain for cattle, probably limited. Why cattle may have been up some this week, maybe a lot of why cattle were up this week. Um, but there's just it's not easy to haul corn all of a sudden or crank things up when it's 1 degree out as it was around my place this morning. So when you look at the big picture, farmers need to be rewarded. They've just kind of put the stuff away, and now they need to take it out of the bin. They got to get some bases pop. They got to do something. So that's supportive, and that's why I think we get that push into the end of the year. From my end, working with farmers over 35 years, a lot of times I hear farmers now say, I'm kind of burnt out. I'm kind of done, unless the market rallies. Then they'll start thinking about it again. Otherwise, they enjoyed Thanksgiving and they want to move on. And I'm starting to hear the talk already. I know it's only December, early December, but they're saying, yeah, we'll wait till after the holidays and see what it looks like.
Could the wheat market give some added support to corn here? I know there's been some geopolitical concern as of late, talk of, issues Russia, Ukraine again. Stats Canada dropped some new numbers on Thursday morning that maybe have some impact to the wheat trade. What's your thoughts across the wheat complex, Brian?
Well, if it is, well, let me start with this. If you look back historically, a lot of our bull markets, and you don't know if it's wheat itself, but wheat is at the forefront or a big reason why grain markets are rallying. So when there's a lot of world wheat supply, that's just like an extra blanket on top of corn, in particular. Um, so the question is, we turn the corner because it too looks like it put a low on the chart, rallied up, now dropped back, kind of back and forth. It needs to show better technical strength, and it needs to have a catalyst. Now, whether it's geopolitical or Russia and Ukraine, stay at it. There's a lot of talk that maybe there's going to be some resolution there, but there's been that talk for 2.5 years.
Mm-hmm.
Nothing comes of it. Um, I don't think. I was reading an interesting article today about Ukraine. Talk about the rebuilding of Ukraine. The rebuild with what? They've lost so many young men, and so you think about farming, rebuilding, everything stretched thin. Is that the kind of environment where you expect, all of a sudden record crops and record logistics and rebuilding ports and things like that? So wheat could be the dark horse. Right now, we're not seeing that, so I'm not predicting that. But wheat has a tendency to kind of perceptively change. The view changes quickly in a few months, and maybe that's lurking ahead. I think there's some bulls out there that think it's just been cheap enough long enough too, and that what do you want to do? Invest in silver that's had a bull market to no end here lately, or do you buy cheap wheat or cheap corn? There might be some of that mentality out there.
How about this soybean complex? I know that's a different demand story. Of course, a lot of this centering around U.S.-China relations and whatever happens there, what's going on there, all the talk about, the 12 million metric tons. Is it end of the year? Is it the end of the marketing year? All the unknowns surrounding that. But it's definitely a different picture in this soy complex when you look at the demand picture as a whole, Brian.
It's interesting because when you look at soybeans, you can look at it and go, well, this rally that the beans have seen since fall, most of it's on political headlines, not on fundamentals. There's plenty of beans in the world, and they're maybe sourced cheaper out of Brazil. But there's trade deals and tariffs and things like this that come into play that it's just the reality of a marketplace. And so these are other variables that aren't kind of cookie cutter supply and demand. It's cookie cutter supply and demand with tariff and or this or that or a deal or commitments. Looks like, from what I can tell, China's in buying. We saw that again today. Um, and read one article where they feel pretty confident they're on task to meet their obligation of the 12 million metric tons. It seems like the whole world's trying to figure out what end of year means, whether it's actually end of the calendar year or end of February, which Secretary Bessent said yesterday, where I don't know where that's the end of the year for anybody other than maybe the Chinese New Year, but it really doesn't matter. You're entering a time where, as long as they're buying and the pipeline starts to move and export sales are there, we've got a really strong crush pace. You've got some good undercurrent in the soybean complex. Technically, though, you do have a head and shoulders formation that points lower and a gap underneath the market. And the concern is that if China doesn't keep up, or the weather in South America is conducive, It's just a matter of time before that neckline is broken. It's got a downside objective where the gap is on like March beans, and that looms larger and larger technically. Um, Now we're into December. So the thing with soybeans, once you kind of cross this end of November, December, get past Thanksgiving, you really start to look at that weather in the southern hemisphere. Argentina, southern Brazil, talking about some warmer type drier weather on this morning's forecast. It may be prolonged. So that could be the start of something. I wouldn't bet on it, but boy, you don't want to dismiss it. The key growing, well, finishing planting growing seasons are right ahead of us.
Brian Doherty, Senior Market Advisor at Total Farm Marketing, is our guest analyst here today. Real quick, we got a December WASDE report coming up here next week, and there's some folks, myself included, wondering if we shouldn't be on our toes for a atypical change by USDA with the shutdown we had, of course, and no October report. December, they usually copy and paste from November and kick the can to January, but I don't know, Brian. Do we have to be on our toes for some unexpected changes this month?
Well, it's what I haven't seen. I haven't seen any like asterisk on the last report saying they would make a yield adjustment in December. So right now, no expected yield adjustment that I'm aware of. So where do changes come from? Would they be line item changes? And are the line items reflective of demand? Kind of looking through different various readings and reports, seems like the market, it's early, but seems to be landing on this idea of a bump up in exports for corn, a little bit of lower feed usage, maybe about a 50 million bushel change to carry out. So that's not much of a change there. I guess the definition of a surprise is we don't expect anything. So if there's a surprise, it's something that I'm not expecting. I'm kind of more I think they kicked the can down the road. Corn, beans, unless they, maybe release the report with a little asterisk saying due to, more data we gathered, we adjusted yield. I'm of the opinion, Brian Doherty is of the opinion, corn yield at 185 bushels an acre and soybean yield at 53 bushels an acre is too high. And I think we'll see some change to that at some point, whether it's in the January report, some surprise in December, or if not even January, in quarterly stocks, probably in June or next September, where all of a sudden you just don't see as much inventory on hand.
All right, let's shift gears, talk livestock before we close out our conversation today. Cattle trade, another decent day to the upside in futures. I've said it multiple times on this program and others that the volatility just remains immense. We've seen a lot of body blows to this cattle complex here the last several months, but we found a way to rally back, and here we are, putting a pretty sizable rally back in after we had a sizable drop here in these futures markets and the cash trade, Brian.
Well, sizable drop is right. And we talked about this, I think, almost ad nauseum, that often you'll see where markets have a tendency to trend and trend and trend and trend. We had a year-long trend in cattle. And so my rule of thumb is if you have 12 months up, you lose half it in 12 weeks. It's just those kind of I'm going to call it alliteration numbers there. And boy, we lost more than half of it in 6 weeks and the rally. And now it's kind of shot back. So you got this V bottom on the chart. So when prices drop off, then we're trying to uncover all the reasons why. And it was, well, the economy and the consumers backing away. They don't like high price this. And there may be some truth to that. But on the way up, we were looking for that and couldn't find any evidence of that. And we were talking about, well, consumers may be just going to buy what they're going to buy. I ultimately think that high prices do tend to curb purchasing or purchasing power. So maybe the true equilibrium price for cattle is somewhere between 200 and 250, and now you're seeing cash bids back in the 220 area or higher. So we're almost right back in that middle ground there. Starts to make a lot more sense with limited supply of cattle and now winter weather this last week. Winter's come early. First go around with really cold temperatures and snow. The cattle aren't going to gain as good as they normally would in a drier. Well, last December, I could have mown my grass several times if I wanted in December. It was such a mild. So I think that's part of this here. But it frankly, it just became good value for the processors or slaughterhouses. Cutouts never did drop that much. So I think the margins improved, and that gave them some room to come back in and buy hedge this or just bid the cash bids higher.
Hog market has kind of chopped around a bit. We're in that mid 80 range here, getting a little support maybe from cattle trade this week. Any notes for you as you look at lean hogs as a whole, Brian?
That market's had this big downtrend, and the expectation is those deferred prices. I think when you go back to August, September, pushing $100 or better on those June, July, the summer months, and corn prices are sub $4. That is going to create an expansionary environment. So whether we like to think of it or not, or do we have enough capacity, or whatever the numbers might be, I still think that in that environment, human nature takes over, and you just kind of keep pushing the pedal. And I think the market has been reflecting that in recent weeks with the consistent, steady downtrend, despite cattle at one point
Mhm.
putting their high end. Hogs are already trending lower. So I think hogs reflect it and are reflecting a market that at maybe tough to sustain demand at higher prices, but easy to expect that the herd will grow some and that we're likely to see, I think, bigger numbers. And that's where the market is now. It's factoring in those numbers. If beef prices, rally from here or hold, I think that you're going to see the hog market recover some. But it's a market that's kind of limping into this year, and for good reason. The herd is expanding.
How about that dairy complex as we enter into the final month of the year, work through the holiday season? I'm always curious to watch dairy demand and more as we work through the holidays. What's the biggest things you're seeing in the dairy trade right now, Brian?
It's maybe what I'm not seeing. We didn't see that holiday type buying that we usually see in late, let's say September, October, just come roaring in and just grab hold of the market. And now you're already into December. So, yes, your big demand is ahead from a cheese perspective, and Super Bowl and pizza and all that kind of stuff. And everybody indoors in winter eating those type of foods rather than maybe grilling out, where you're not grilling out cheese, but now you're cooking pizza with cheese for sure, or having cheese platters. Uh, but the market just has too much inventory, and that's been again another round of new lows. Now, maybe we're starting to see. Yesterday, we saw a reversal on some of the futures contracts and some follow through today. Stochastics gave a crossover buy signal. Maybe you're just seeing a market that's kind of exhausted itself and it's too cheap, and good value, really good value to the processors, end users, and ultimately maybe into the retail sector. So I want to be optimistic, but I have to be realistic. This dairy on beef, it's created again a lactation cycle that I think is one too many, and that's been bearish. Where I think this thing gets friendly somewhere down the road, these and maybe the start is there already. Where because of financials, you're going to see these older cows move and get out, and you're going to see a loophole where there's not enough ready heifers. On top of that, you think about how the market's probably seen an investment in somewhere between 10 and $11 billion in new processing plants and new infrastructure and reach. There's a there's a there's a really optimistic view on the demand side and ultimately the usage side worldwide, and thus the investment into this community. But right now, I think it's just a little bit too much supply problem, and the market just can't get off a slippery slope.
Brian, anything final for our listeners here this week?
Well, if you're a corn or soybean farmer, keep in mind that, and I've talked about this before, that if you're storing, um, think about why you're storing, what you want to get out of it, right? So, corn, soybeans, I always make the argument that on a 10 or 15% increase in value off what we think is the low, start to reward the market. If nothing else, no one can fault you for saying, "Hey, I sold some on a rally." I know they're not great prices, but they are not prices that I think are um, to be ignored either. We're not running out of inventory. So 15% increase in beans is where the market recently topped. 10% or better in corn where it recently topped. We rallied back. Start selling some into that rally.
Brian, if folks want to reach out and talk with you and the rest of the team at Total Farm Marketing, what's the best way?
I would ask them to give me a call, 800-334-9779. We'll start with that. And then from there, if you want to email Brian with a Y at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com. A lot of good resources there.
Brian Doherty, Senior Market Advisor at Total Farm Marketing. Always good to hear from you, sir. Thanks for joining us on Market Talk. Appreciate it.
Yes, sir. Thank you, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.